Welcome to Ray Dalio Warning. Please like, subscribe, and share.
What if I told you that gold and silver are screaming a message right now that could either save your financial future or destroy it, depending on whether you're prepared? Ray Dalio, the billionaire investor who built a $160 billion fortune by reading signals others miss, says that what precious metals are telling us today will separate winners from losers in the coming economic upheaval. If you're an unprepared investor holding conventional assets and ignoring what gold and silver are screaming, you're walking blindfolded toward a financial cliff. The next 20 minutes could determine which side of the greatest wealth destruction in your lifetime you'll be on. Ray Dalio, the founder of Bridgewater Associates, the world's largest and most successful hedge fund, didn't become a billionaire by following the crowd. He built his entire investment philosophy on reading economic signals that the majority ignores until it's too late. And throughout his 5-decade career, one signal has proven more reliable than any other for predicting systemic economic danger: the behavior of gold and silver. Right now, in 2026, these precious metals aren't just rising, they're screaming warnings that, Dalio says, will ruin unprepared investors while creating unprecedented wealth for those who understand and act on these signals. In this video, we're going to decode exactly what gold and silver are screaming about the state of our economy, our currency, and our financial system. We'll break down why Dalio believes unprepared investors face financial ruin, what specific dangers these metals are warning us about, and most critically, the exact steps you need to take right now to position yourself among the prepared few who will not just survive, but thrive through what's coming. This isn't theory. This isn't speculation. This is about understanding a language that markets speak, a language Dalio has mastered and that you're about to learn. To understand what gold and silver are screaming today, you first need to understand their unique role in the economic system. Throughout human history, spanning thousands of years across every civilization, gold and silver have served as the ultimate form of money and store of value. They're not just commodities or investments. They're the measuring stick against which all paper currencies are ultimately judged. Dalio explains this in his book, Principles for Navigating Big Debt Crisis, using a powerful framework. Every fiat currency, every paper money system not backed by gold eventually faces a crisis of confidence. When governments print too much money, accumulate too much debt, or lose the trust of their citizens, gold and silver don't just rise in price. They scream warnings that the monetary system itself is breaking down. Consider what happened in the 1970s. Gold was $35 per ounce in 1971 when President Nixon severed the dollar's last link to gold. By 1980, gold had exploded to $80.50, not because gold changed, but because the dollar's value collapsed through inflation and loss of confidence. Those who heard gold's warning early and positioned themselves in precious metals preserved their wealth. Those who ignored the signal and held cash and bonds saw their purchasing power decimated by double-digit inflation. Or look at 2008. While gold didn't predict the exact timing of the financial crisis, it had been steadily rising for years before the crash, warning that the housing bubble, excessive debt, and risky financial engineering were unsustainable. Dalio's framework, which included significant gold allocation, allowed Bridgewater to not just survive, but profit during the crisis while conventional portfolios collapsed. This is exactly why Dalio's current warning matters now. Gold and silver are screaming louder today than at almost any point in modern history. The question is, are you listening, or are you about to become one of the unprepared investors Dalio warns will be ruined? First, Dalio believes that gold and silver are screaming a clear message. We are entering a period of aggressive monetary debasement, that will ruin unprepared investors holding paper assets. Here's the brutal reality that most investors don't want to face. The United States has printed more money in the last 5 years than in the previous century combined. The money supply exploded during pandemic response, and despite claims of fighting inflation, it has never meaningfully contracted. The Federal Reserve, the European Central Bank, the Bank of Japan, central banks worldwide have engaged in the largest monetary experiment in human history, and gold and silver are screaming that this experiment is failing catastrophically. When gold rises despite high interest rates, as it's doing now, it's sending a specific message. Normally, higher interest rates make gold less attractive because you can earn yield elsewhere. But when gold climbs anyway, breaking through all-time highs above 700 per ounce, even with elevated rates, it's telling you something critical. Investors have lost confidence in paper currency's ability to maintain purchasing power. They're choosing a zero-yield asset over yield-bearing assets because preservation has become more important than return. Dalio has famously stated, "Cash is trash." But what does that really mean? It means that every day you hold cash, you're holding an asset that's being deliberately debased, devalued by monetary authorities desperate to manage unpayable debts. Your 100,000 in savings might still say 100,000 on your bank statement, but its real purchasing power, what it can actually buy, is systematically destroyed. So what happens if you're an unprepared investor holding significant cash positions, money market funds, or short-term bonds, thinking you're being safe? You face guaranteed loss of purchasing power, not potential loss, guaranteed loss. Gold and silver are screaming this warning. Your safe haven is actually a trap. But here's the pattern interrupt most people miss. This isn't just about the dollar, the British pound, the euro, the yen. Every major fiat currency is being debased simultaneously. When the entire global monetary system faces debasement, there's nowhere to hide in paper currencies. This is why central banks themselves, from China to Russia to Poland to Singapore, are buying gold at record rates not seen in over 50 years. They're preparing for what's coming while telling you everything is under control. This means if you're unprepared, if you have no allocation to assets that preserve purchasing power during monetary debasement, you will be systematically impoverished, even if you never lose your job, even if the stock market doesn't crash, even if there's no dramatic crisis. The silent theft of inflation and currency debasement will accomplish what no market crash could: the destruction of your wealth over time. But here's where it gets more complex and far more dangerous for unprepared investors. On top of monetary debasement, gold and silver are screaming a second message. We are in the terminal phase of a debt crisis that will devastate those who don't understand what's coming. Dalio has spent decades studying debt crises throughout history, from ancient Rome to Weimar Germany to Argentina to Greece. His research revealed a consistent pattern: debt crises unfold in predictable phases, and we are now in the most dangerous phase, where debt has become mathematically unpayable without severe economic consequences. Look at the numbers that gold and silver are reacting to. The United States carries over $36 trillion in federal debt, more than 120% of GDP. But that's just the beginning. When you add unfunded liabilities for Social Security, Medicare, and other obligations, the real number approaches 200 trillion. Annual interest payments now exceed $2 trillion and rising, more than we spend on national defense, more than Medicare, consuming an ever larger share of government revenue. Here's the critical insight from Dalio's framework. When debt reaches these levels, there are only three possible outcomes: austerity, default, or inflation. Austerity means brutal spending cuts and tax increases that destroy economic growth. Default means the government refuses to pay, causing catastrophic loss for bondholders. Inflation means they pay back debt in devalued currency, which is what gold and silver are screaming will happen. And inflation is the politically easiest path, which means it's the path they'll take. But for unprepared investors, it's the most insidious because it happens slowly, then suddenly. Silver, meanwhile, is screaming an additional message. While gold is primarily monetary, silver has critical industrial applications. It's essential for solar panels, electric vehicles, 5G technology, medical equipment. Yet silver is surging not just because of industrial demand, but because it's amplifying gold's monetary warning. When silver outperforms gold on a percentage basis, as it's beginning to do now, it historically signals that we're moving from the warning phase to the crisis phase of monetary breakdown. So far, we've seen that precious metals are screaming two interconnected warnings: monetary debasement that guarantees purchasing power loss for paper assets, and a debt crisis that must be resolved through inflation or default. Both spell ruin for unprepared investors. And that's not even the scariest part. What most investors fail to grasp is the speed at which confidence can break once these crises reach a tipping point. Dalio's research on historical debt crises shows a consistent pattern. Everything seems manageable right up until it isn't. The signals are there: gold rising, silver surging, central banks accumulating reserves, but most people ignore them because there's no dramatic headline event forcing them to pay attention. Then, seemingly overnight, the crisis becomes undeniable. Currency values plummet, inflation spirals out of control, bond markets collapse, and by the time unprepared investors recognize what's happening and try to protect themselves, it's far too late. Precious metals have already surged beyond their reach. Capital controls may be imposed, and their wealth has been decimated. This is precisely why Dalio warns that unprepared investors will be ruined, not because they're foolish or lazy, but because they're listening to soothing reassurances from authorities who have every incentive to maintain confidence even as the system breaks down, rather than listening to what gold and silver are screaming about reality. Now we arrive at the most critical insight, the core message that separates those who will be ruined from those who will be prepared and protected. Gold and silver aren't just screaming warnings. They're screaming a specific instruction: prepare now while there's still time, or be ruined when the crisis accelerates beyond control. Here's what Dalio understands that unprepared investors don't. Financial ruin during monetary and debt crisis isn't random. It's a direct consequence of positioning, holding the wrong assets in the wrong proportions at the wrong time. The good news is that preparation is still possible. The bad news is that the window is narrowing rapidly. Imagine two investors facing the same economic crisis that gold and silver are warning about. The first investor, call him David, is unprepared. His portfolio looks like the conventional wisdom recommends: 60% stocks for growth, 40% bonds for safety, maybe some cash for emergencies. He believes diversification means owning different stocks and bonds. He's been told gold is a barbarous relic and that the Federal Reserve has everything under control. When the monetary debasement and debt crisis that gold and silver are screaming about fully materializes, here's what happens to David. His bond portfolio gets devastated as inflation far exceeds bond yields and rising rates crater prices. He loses 30%, 40%, potentially 50% on what he thought was his safe allocation. His stock portfolio crashes as economic crisis triggers earnings collapse and market panic, another 4% to 50% loss. His cash savings lose massive purchasing power to accelerating inflation, 20%, 30% of real value gone within months. Within a year, David has lost half or more of his real wealth. His retirement is destroyed. his children's college fund is decimated. Everything he worked decades to build has been ruined, not because of bad luck, but because he was unprepared. Now imagine the second investor. Call her Maria. She heard what gold and silver were screaming and took Dalio's warnings seriously. She allocated 15-20% of her portfolio to physical gold and silver, not as speculation, but as monetary crisis insurance. She diversified into truly uncorrelated assets, commodities that benefit from inflation, real estate with pricing power, treasury inflation, protected securities that adjust with inflation, international exposure, and currencies with stronger fiscal positions. She reduced exposure to long-duration bonds that would be slaughtered by rising rates. She studied Dalio's all-weather portfolio principles and adapted them to her situation. When the same crisis hits, Maria's experience is radically different. Her precious metals surge 100%, 200%, perhaps 300% or more, not just in nominal terms, but in real purchasing power, offsetting losses elsewhere. Her inflation-protected assets maintain value while others crumble. Her reduced bond exposure means she avoided the worst of the bond market massacre. When economic crisis creates panic selling and asset prices collapse, Maria has dry powder to buy quality assets at fire sale prices from desperate, unprepared investors like David. She emerges from the crisis not just protected, but significantly wealthier in real terms, while David has been financially ruined. This is not theoretical. This exact pattern has played out in every major monetary and debt crisis throughout history. The only variable is who prepares and who doesn't. But here's the urgency that cannot be overstated. The window for preparation is closing rapidly. Gold is already at all-time highs. Silver is beginning its acceleration phase. Premiums on physical metals are rising. Once the crisis becomes obvious to everyone, once it's the lead story on every news channel, and everyone is trying to buy precious metals simultaneously, you won't be able to position yourself at reasonable prices. The herd will drive prices vertical, physical availability will dry up, and preparation will become impossible. Dalio's framework gives us a specific action plan for prepared investors. Step 1. Allocate 10-20% of your portfolio to physical gold and silver immediately, not ETFs that might not have the metal they claim, not mining stocks that carry company risk. Physical metal or highly secure allocated storage with reputable vaults. This is your monetary crisis insurance, your protection against what precious metals are screaming about. Step 2. Implement radical diversification across truly uncorrelated assets. Don't confuse owning different stocks with diversification. Real diversification means asset classes that perform differently under different economic conditions, commodities, real assets. Inflation-linked bonds, precious metals, international exposure, even cryptocurrency as a small asymmetric bet. Step 3. Aggressively reduce exposure to long-duration bonds and excessive cash holdings. These are the assets that will be ruined by what gold and silver are warning about. If you need cash for liquidity, keep 3 to 6 months of expenses maximum, but understand you're consciously accepting guaranteed purchasing power loss for that convenience. Step 4. Study and understand Dalio's principles of economic cycles and debt crisis. Read Principles for Navigating Big Debt Crisis to understand where we are in the cycle and what comes next. Knowledge is your greatest preparation tool. Step 5. Think globally and position defensively. When the world's reserve currency and largest economy face monetary and debt crisis, no one is completely insulated. But some countries and currencies have stronger positions, lower debt, better demographics, sound fiscal policy. Diversify internationally to reduce single country risk. The concrete framework is this: precious metals for monetary crisis protection, real assets for inflation protection, global diversification for systemic risk reduction, and constant learning to adapt as conditions evolve. This is how prepared investors will survive what unprepared investors will be ruined by. The choice is yours. Gold and silver are screaming their message clearly. Will you be prepared or will you be ruined? Ultimately, what does this all mean for you and your financial survival? We've established that gold and silver are screaming three critical messages. Aggressive monetary debasement is destroying the value of paper currency and cash holdings. A terminal phase debt crisis must be resolved through inflation that will devastate bondholders and savers, and unprepared investors holding conventional portfolios face financial ruin, while prepared investors position for protection and profit. The question that opened this video: what are gold and silver screaming that will ruin unprepared investors? Now has a clear, definitive answer. They're screaming that the financial system we've known for decades is breaking down under the weight of unpayable debt and unsustainable monetary expansion. They're screaming that paper promises will be broken and paper wealth will be destroyed. And they're screaming one final message: prepare now or be ruined. But Dalio's framework transforms this from a message of fear into a message of empowerment. Because while unprepared investors will indeed face ruin, prepared investors who understand and act on these signals will not just survive, they'll thrive. In short, Dalio's message is this: gold and silver are sophisticated warning systems screaming that we are entering a period of monetary and debt crisis that will create the greatest wealth destruction and wealth transfer in modern history. What these precious metals are screaming will absolutely ruin unprepared investors. But it doesn't have to ruin you if you prepare now by implementing the framework we've outlined, allocating significantly to precious metals, diversifying into real inflation-resistant assets, reducing exposure to paper promises that will be broken, studying economic cycles to understand what's coming, and positioning globally to reduce concentrated risk. You transform from a potential victim of what's coming into someone who is protected and positioned for opportunity. If you ignore what gold and silver are screaming, if you remain unprepared holding conventional portfolios built for an economic environment that no longer exists, if you trust that authorities will somehow solve problems that history shows are unsolvable without pain, you will join the ranks of ruined investors who will look back and say, "I wish I had listened to the warnings." This isn't speculation. This isn't fear-mongering. This is Ray Dalio's proven framework, validated across 5 decades of successful investing, across multiple crises and cycles, across different countries and economic systems. He built the world's most successful hedge fund by listening to what gold and silver scream while others ignore the warnings. His principles of understanding debt cycles, monetary debasement, and crisis preparation have protected and grown billions of dollars through every market crash and currency crisis. The monetary debasement is real and accelerating. The debt crisis is mathematical and unavoidable. The warnings from gold and silver are clear and urgent. Unprepared investors will be ruined by what's coming, but prepared investors, those who understand what precious metals are screaming and position accordingly, will emerge stronger, wealthier, and financially secure while others face devastation. The knowledge is yours. The warnings are clear. The framework for preparation is proven. Now it's purely about decision and action. Will you prepare, or will you be among the unprepared investors who are ruined by ignoring what gold and silver are screaming right now? The choice and the consequence are entirely yours. What's your take on this? Have you heard what gold and silver are screaming, or are you still unprepared and at risk of being ruined by what's coming? What percentage of your portfolio is allocated to precious metals and crisis-resistant assets right now? Let us know in the comments below. We want to hear whether you're prepared or if this video has opened your eyes to the warnings you've been missing. If you found Ray Dalio's warnings valuable and want to continue learning from the world's most successful investors who've navigated every crisis by reading the signals others miss, subscribe to this channel right now. We decode the warnings, explain the frameworks, and provide the preparation strategies that separate survivors from casualties in economic crisis. Next time, we'll dive deep into Ray Dalio's complete all-weather portfolio construction, the exact asset allocation formula designed to survive and thrive, whether we face inflation, deflation, growth, or recession. If you want to be truly prepared for whatever gold and silver are warning about, you cannot miss that video.
Thank you for watching. Please subscribe.